Hello everyone. Hope everyone having a good weekend. So for next 20 to 30 minutes, let me explain what is this SPX income system? Why do we need to take time to learn during this market? So what are the rules? And let me also explain you with some real-time examples. So to start with, the first thing is for anything, you need to understand why. What is the reason we need to take time to have a side hustle or learn something different. Most of you might be already in some IT jobs or non-IT jobs or some other businesses. Then you need to understand why we have to take time to learn because of two major reasons. One is with the immigration reforms changing in US or across the globe. It is not just in US but across the globe we see every day we see a lot of layoffs, especially in IT. Not just in IT, even in non-IT also we see a lot of jobs getting cut down due to AI evolution, right? AI is taking over because whatever 10 developers can do, now one developer can do the same stuff using different AI tools. That is one reason. Second reason is because of, right, whether you are in US, UK, or Australia, wherever you are, a lot of changes are happening so that they want to preserve the jobs for local US citizens or UK citizens. So that immigration reforms also, there are more and more things are getting more and more tougher. Now anyone who want to enter into US on H1B, they have to pay 100K, or if they have any diabetic or any obesity conditions, they will not get visas. So even when we go for renewals or extensions, such type of problems can happen. And as you get more and more experience in IT, that becomes more and more difficult for you to preserve or retain your jobs. That will recover because for the same pay, they can hire two or three freshers or two or three with 2 year, 3 year experience who can do the same job. So because of all these reasons, we all need to have a side hustle or a plan B where we can create a similar type of income even if we lose our primary job. That's the main reason because of the current job market scenario, because of AI, because of immigration reforms, because of over experience. We should have a, a plan B or a side hustle so that when you feel like you can make more income than your primary job, then you can fire your boss rather than you worrying about the layoffs. That is the main reason. Then some expectations, right? Don't think this is something like get rich quick scheme where you will become rich within a week or month or 2 months. So you will not walk away where you will make 100%, 200% within a week or two. So this is more like a low risk strategy with a very, very limited risk, a minimal risk, and low way where you can collect small, medium profits or a low profits with a low risk strategy. So we will have 85 to 90% success by using one ticker called as SPX, which is nothing but your ES 500 index, which is the out of all thousands of stocks, ETFs, this is the highest liquidity ticker with huge volume every day. So we use that SPX ticker, and we in this session you will learn how to collect consistent premiums. So using a strategy, right? We use a disciplined strategy, small and consistent profits with a proper discipline. We need to just follow the strategy and you collect the premiums. So again, right, as I mentioned many times, day trading has high risk and high reward, whereas this is more of a swing trading strategy where you have low risk and low reward. So this is mainly good for members who want to take low risk. They are happy with making 200, $500 every week with one contract. All right, but you don't want to take high risk. So this is the best one. And also, if someone who is busy with their jobs, this strategy is the best for those members. So during next 30 to 40 minutes, you will see how to build wealth using this SPX strategy by avoiding any risk. And then you will see a step-by-step framework on how we can get it. And we'll use the, right, I'll show you the exact strategy, how we can do it. For this one, you don't need any special skills or lot of experience in trading. You don't need to sell anything. right? You're not selling any products or anything. You don't need to have huge number of followers or audience. You don't need to build any websites. You don't need to do any TikTok videos, or you don't need any large time commitment. You don't need to spend hours together on charts, and you're not taking a massive risk. So again, right, we all want to make that side hustle. We want to have a side hustle using online. And this is one such type where you can make money using the SPX income trading with a minimal time investment with a minimal risk. So again, right, you don't need to depend on employer, you don't need to find clients, you don't need to depend on customers. It is completely you following a disciplined, a systematic strategy. You are not dependent on anyone else. All you need is depend on the system, depend on the strategy, depend on the rules. Just you follow the rules, you will be successful. So if, so basically, right, whatever you see strategy, we'll also see with some real-time examples. And the best thing is, even market goes up, goes down, stays choppy, the strategy will help you to make money in the market. Again, right, you don't need to create any products, you don't need to hire people, you don't need to build websites. So nothing, just one simple strategy, recession-proof strategy. And you can do it even using your phone. You don't need to be before a laptop or something. And you don't need to worry about tweets from Trump or something suddenly happening. This will work whether you are in office, you are at home. You spend just 10-15 minutes a day or per week, which you have to spend without much stress or without much guesswork. So you can do it whether you are in US, UK, Dubai, wherever you are. This is the strategy. You can use it across the globe. This is completely a rule-based trading, right? We follow certain rules, and you don't need to spend hours together. You don't need to watch lot of charts or lot of tickers. You don't need to have 10 different indicators. All we use is one indicator. We follow that. So again, right, for this one, the using the indicator, you can use it for different things. You can use it for futures, commodities, stocks, options, forex, cryptos, bonds. You can use it. But again, when you do it on so many tickers, right, it is you will become right. You'll sometimes you may get confused with so many tickers, so many trades. It will be suddenly if you have to manage the trades, it becomes difficult. That's why the best thing is we use one single ticker, which is the SPX ticker, which has the highest liquidity and has the highest consistent growth every year, year on year. SPX keeps going up. So that is the one ticker which we follow. Once you become comfortable with SPX, then you can use the same with NDX. You can use with RUT, Russell Index, NDX, or you can use with the Dow Jones Index. The same strategy can be applied across other tickers. But initial for first few months, you just to follow SPX because that is the best ticker with highest liquidity and highest volatility, highest volume. There won't be much difference between the bid and ask, so you won't be paying much in the commissions. Or so because of all those advantages, we'll start with SPX. So SPX options for income is the easiest asset class to profit from. So you can also use it on ES, you can use it on SPY, you can use it on TQQ, you can use it on NQ, so many tickers, but out of all, SPX is the best ticker to use. So this is the same strategy Warren Buffett also uses, right? Mainly he does the cash secured puts or he does these vertical spreads where he is making millions or billions of dollars every year on year. Again, the major difference between SPX and SPY, most of you might have known what is SPY, which is right another ETF. The major advantage with SPX is it is completely cash settled. That means there is no assignment risk. It is completely settled in cash. Whatever you make, either gain or loss, that is done for the day or that is done for the trade. You don't need to worry about suddenly if there is a right. Sometimes we buy some stocks or you do SPY, you do GLD, you do SLV. Right? We saw that suddenly if GLD goes up, goes down, they may assign the stocks. Your account will be completely blocked. So such type of problem you won't have such type of problems with SPX because completely it is cash settled. You don't need to worry about if the broker assigns you stocks. Suddenly, if there is a market drop or market bounce, it won't impact your account, right? Whatever trade you take, that's it. For the trade, you will be either making money or you will have a small loss, but there won't be any stock assign. That's why even though this strategy can be used with SPX, PIES, NQ, all those things, the first best ticker, the best ticker you follow is SPX. And also, as you trade more and more, you become more and more comfortable. When you watch 30, 40 different tickers, you may get confused. If you are following SPX, you follow Tesla, you follow Nvidia, you follow Meta, you follow Google, you follow Amazon, you follow so many tickers, you will not be perfect in anything. But if you keep just watching one ticker, one strategy, then you will know that, oh, if SPX goes to this level, there is a strong resistance here. If SPX comes here, there is a strong support here. Like that, after trading for a few weeks, you'll become very, very comfortable with the levels. You'll become very comfortable trading it with a lower risk. That's why that is another advantage. One is it is completely cash settled, no risk of assignment of stocks. Second thing is it is the highest liquidity ticker, so your spreads will be very, very minimal. There won't be much difference between the bid and ask. If there is a huge difference between bid and ask, you will, because when you try to buy, either you do market order or you do limit order. If there is a huge difference between what somebody want to sell, what someone want to buy, already you are starting a trade with a with a 5%, 10% loss. But when the bid and ask is very narrow, you have more advantage to make money. So that is what SPX has, all those advantages where you need a low or a minimum skills. You don't need to know a lot of things about trading. All you need to do is you need to just learn about one ticker, one strategy. It is a low risk strategy, high probability strategy. And because of the rule based strategy, you don't trade with emotions. You just follow just like a robo. You just do whenever it gives a bull put or bear call or a bullish tag and turn or bearish tag and turn, use those strategies. So this is best for members who want to build wealth without worry, without spending hours together on the charts, who don't want to right stress out, who don't want to yeah, right to become rich within one day. So this is best for those type of traders who want to build in a study with a low risk way in a consistent manner. This strategy is best for them. So most of us know about in options market, when something is bullish, we generally buy calls, right? We buy naked calls. When you see something is bearish, if Nvidia is bearish, you can buy puts. Or if Tesla is bullish, you can buy calls, right? That is what generally most of the retail traders do. But what the big companies, right, whether Warren Buffett or all these big banks, or if you take even insurance companies, what they do is they don't make money by doing a naked call or naked puts, but they will be mainly the sellers, right? They sell the calls or they sell the puts, because when you sell, you are collecting the premiums, right? Just think like an insurance company, right? You can be a buyer of insurance or you can be seller of insurance. When a company is selling the insurance, out of 100 people, there might be one or two people who may get into accident. Insurance company may have to pay the claim money for those two people. But they are making money from other 98% or other 99%. So they have edge in the system, right? They have higher chance of making profits. Or if you see a casino, right? Whenever you go to a casino, you play roulette or you play poker, whatever you do, always casino has the edge, right? Maybe lucky with some luck, you may make money once or twice, but the casino makes, so that's why you see those casinos making billions of dollars. So whether you want to be a casino or whether you want to be a casino player, In the same way, whether you want to be insurance company or you want to be a person paying the insurance. So that's what 90% of the time these big companies make money, whereas only 5 to 10% of the time retail traders make money. So we want to trade like the big companies who sell the calls or who sell the puts rather than retail traders who buy the calls and who buy the puts. But if you just sell a naked call or just sell a naked put and suddenly market reverses against your direction, anticipated direction, you have a huge risk. So that's why what we do is we do something called as a credit spread where mainly you are a seller. That means 80% your intention is to sell a call or sell a put. So when something is bullish, generally we buy, right? As a retail trader, we buy calls. But instead of buying call, you can also sell a put when something is looking bullish. Or when something is looking bearish, generally retail trader buy the puts. Rather than buying a put, you can sell the call. But if you, instead of just doing a naked call, selling a naked call or naked put, we are also doing a hedge. That means you are selling a call and also buying a call little bit above that. In the same way, when you are selling a put, you are also buying a put little less price as a hedge, as a protection. So that suddenly if something happens also, you have a hedge. So your risk will be minimal. So that is what is called as a credit spread, where you always want to be collecting the money from the right. You have to be like a casino or you have to be like an insurance company, collecting the money rather than paying the money. You are not paying money, you are collecting the money. So you have higher chances of success. So when you collect the money, you have 80 to 90% chance of making money in the market because, for example, you are bullish about Tesla. So instead of buying a call, you are selling a put. If you are selling a put or you are selling a, let us say you are selling a 430 put, you are buying a 425 put. In that scenario, what happens is if Tesla stays above 430, you can keep all that money, right? Whatever credit you collected, you are keeping all that money. Or if Tesla stays somewhere around 430 or 429, 428, still you can keep all the money. So you have higher chances of success. Whether your direction is right, you will make money. If your direction is little bit wrong, you will make money. If it is stays choppy, you will make money. But when you buy a call, only if Tesla goes quickly in the upside direction, then only you will make money. So you have only 20-30% of chance to make money when you buy the naked calls or when you are going directional trades. But when you're doing credit spreads, instead of buying a call, you are selling the puts, whether it goes up or stays choppy or if it goes little bit down, you have more chances to make money. So in credit spreads, mainly you have two types. One is a put credit spread, which is a bullish to neutral strategy. Whenever you think something will stay choppy or when something will be bullish, we do bull puts. That means whenever you feel like SPX is bullish, you can, or Tesla is bullish, or Nvidia is bullish, Meta is bullish, Amazon is bullish, then we do something called as bull puts, where you sell a higher strike put and buy a lower strike put. Right? Again, tomorrow I'll be doing live session where you can see everything in live action. But whenever you are selling a higher strike put and buying a, so we are buying a lower strike put as a hedge, as a protection. We are selling a higher strike put because we are based on different factors. We are thinking that the price will stay up. So when you know the price will stay up, if you are doing a uh, so when you are doing a put credit spread, if price goes up, you make money. Price stays choppy, you make money. Price goes little bit down, you make money. Right? If price goes so much down than what you anticipated, that is where we'll have a loss. But if price goes up or price stays choppy or price goes little bit down, we have all the ways to make money. In the same way, bear call spread, right? A call credit spread or a bear call spread is where if you are bearish about some ticker, bearish about SPX, then instead of buying puts, we are selling the call. You sell a call and you buy a little lower strike call as a hedge, as a protection. So if price stays below that price, you will make money. If price stays choppy, you'll make money. If price goes a little bit high than what you anticipated, still you make money. So you have nearly 80% chance when you do the credit spreads, whether you do bull puts or bear calls, you have higher chance to make money. Whereas when you do naked calls or naked puts, only if it goes up quickly, right? If you are buying a naked call, only when it suddenly SPX goes up, you make money. If SPX stays choppy, or if SPX goes down, or if SPX takes a lot of time to go up, you lose in all the three scenarios. Only one way you will make money is, so trading is all about probability and possibilities. So you have higher probability, higher chances to make money when you do this trade spreads or bull puts or bear calls, where you are thinking like a market maker, you are thinking acting like a market maker. You want to be right when you are in a class, you want to, whoever is the topper of the class, you want to be like them, right? You don't want to be someone who is in the last rank, right? You want to take the notes from the topper, you want to follow like which material he is going through, which one he is reading, you want to be like them. In the same way, in the trading, we know that market makers make 80-90% of the time they make profits. So we want to be like them rather than a buyer, buyer of naked calls, buyer of naked puts, where you have low probability of success. You want to be a seller, but you don't want to be a naked seller, because naked selling of call, naked selling of put, you need lot of big capital, and also you have a bigger risk. You have a higher risk. So that's the reason, instead of doing a naked selling of calls or puts, you are also buying a hedge, so that as a protection. So that's what we do. So, right, on a high level, if you want to make 85-90% success in trading, whether market goes up, goes down, goes in a sideways direction, we follow the credit spread strategy. Whenever we are bullish, we do bull put strategy. Whenever we are bearish, we do the bear call strategy. So, right, that is the high level. So now let us take some examples. Let us look at trading view so that you will understand when to do bull puts, when to do bear calls. For example, right, let us see SPX. So whenever price comes all the way to the bottom, right, price came all the way to the bottom, you got a, right, here you want a low risk strategy, right? You want to build income in a consistent way. You don't want to be right, take any high risk, or you don't want to keep looking at the charts throughout the day. You want to take very minimal risk. You don't want to uh, take any risk of losing money. That's where the strategy is helpful. That's why as you go higher and higher time frames, you have lower and lower risk. If you use 1 minute, you will have lot of opportunities, but it also comes with high risk and high reward. If you use 5 minutes, better than 1 minute, but still it will come with a risk. For 15 minutes, little better. So generally we use a time frame called 30 minutes. 30 minutes is a good time frame for this strategy, where whenever you see something, right, price came all the way, right, SPX drop, right, it went all the way to the top, and then it came all the way to the bottom, and you got something called as bullish tag and turn. That means it is telling that okay, now price will be bullish. So this is where you go, right, whenever it happens. For example, it happened on 21st November. Then you go 5 days from that 21st. Then you do a 5 day expiry trade. You do a bull put here. That means, right, because price came all the way down, it is telling that now price will go up. So that is where we do a bull put. So you, for example, on a 5 point spread here, you collect some $300, because if you do for the same day, you will collect less premium. But you are going 5 days, right? From, if you are doing on 21st, you take for 26th. Then your premium will be nearly $300-350 you are collecting on a 5 day expiry. So for a 5 point spread, you are collecting nearly $300-350. Based on your account size, you can take one contract, you take 5 contracts, you take 10 contracts. So if it is a 5 point spread, right? For example, here it is 6,000. 6,575. So you are doing something like you are selling 6,580, you are buying 6,575. So you are doing a 5 point spread. That means your maximum risk is 500, but you are already collecting $350 as a credit because you are like an insurance company. You are telling the buyer that okay, even if SPX drops also, I'll cover your loss. But you know that already price came all the way down. Now it is bullish. So you know that there is a high possibility for SPX to go all the way up. So that's where you are doing a bull put at the bottom. Whenever you see a bullish tag and turn, you do a bull put, you take a 5 point spread, and then you are collecting premium. That means out of $500, you already collected $350 because you are doing for a 5 day expiry. So your maximum risk is $150. If market for next 5 days it continuously keeps going down, the chances are very, very minimal, right? 5% chance because already you are buying at a bottom. So for next 5 days, it dropping is very, very right close to 1%, 2%. It already came to the bottom, it started going up, and you are not immediately doing for the same day. You are doing for after 5 days, you are telling that the price will stay above this. So in next 5 days, if price stays above this, so let us say you did a bull put here. Now price went all the way nearly 100, 200 points up. So that means all the $300 per contract is 100% yours. You don't need, right? It is like insurance, right? You sold a premium, nothing happened to that customer. That means all that money is yours. So somebody thought SPX may go down. They bought an insurance policy from you because price went all the way up. All that premium is 100% yours. So that's what whenever you get a bullish tag and turn, you do the bull puts. If, for example, if SPX goes all the way to the top, now tomorrow we get a bearish tag and turn at the top. Then you do a bear call. That means you are telling that okay, in next 5 days, price will stay below this 68.50 or 68.60. So in next 5 days, if price comes down, then all that money is yours. Right? In that way, you are so your risk is very, very minimal. You are doing when price comes all the way to the bottom and then it starts going up. That is where we do bull puts. When price goes all the way to the top and then it starts dropping, that is where we do bear calls. So that is how you have a minimal risk because once you get a bullish tag and turn within next 5 days, the chance of SPX staying above that is nearly 95%. So even if one day after getting bullish tag and turn, even though it may do a double bottom, it may do one more time, it may come down, but it will keep going up again. Or whenever it gives a bearish tag and turn, even if it does a double top one more time, it may go a little bit up, but again finally it will drop in next 5 days. So your chance of price going further high is very, very minimal, but the price dropping is 90-95%. So you right, I hope it is making sense for each of you. Right, price dropped all the way. Big companies always wait for price to drop and then they buy at the bottom, they sell at the top. So whenever price comes all the way to the bottom, you got a bullish tag and turn. That is where you are you are selling a higher strike put, you are buying a lower strike put. You can do 5 points or even you can do 10 points. If you do it right, for example, on Friday we did a 10-point bear call spread. So if price stays below that, then all the money is yours. So like that, whenever you get a bullish tag and turn, you can do a 5 point or 10 point spread. And if SPX stays above that price within that next 5 days, you don't even need to wait until all the 5 day expiry. Even if it stays 1 or 2 days, right? After 2 days, 3 days, for example, you collected $350. After 1, 2 days, price went up. That means nearly 150, 170, $180 you can keep, you can buy back the spread again. Right? Or you wait until end of 5 days. If price stays above this price, all that money is yours. Whatever you collected, that is like your insurance premium. You collected the premium, nothing happened to the customer, all that money is yours. Right? Whenever you get a bear call, so So like this, you start with SPX. Once you get comfortable, now you do the same thing with RUT. Again, because all these are cash settled, you don't need to worry about. So you got a bullish tag and turn. Then RUT started going up, up, up. So tomorrow or day after, we may get a bearish tag and turn. Then you do the bear calls, right? Once you get comfortable with RUT, you can do NDX, right? Because most of the time they all move in the same direction. So you got a bullish tag and turn. You do bull puts here. Whenever price may go touch somewhere at the top and start dropping, then that is where you do the bear calls. So like this, whenever you see a bullish tag and turn, we do the bull puts. Whenever you see the bearish tag and turn, we do the bear calls for the next to 5-day expiry. So your risk is very, very minimal. Your reward is right. It is not that, for example, if you buy a call, you might have made more money, but that also comes with a high risk. Right? When you buy a call, suddenly it stays choppy for some time. Then you may lose your premiums. But with a bull put, even if it stays choppy, you will make money. If it goes up, you will make money. If it goes little bit down for next to 5 days also, still you will make money because you are collecting. Your reward is $350. Your risk is $150. So if it stays little bit up, you can keep all the 350. If it stays choppy, you can keep nearly 350. If it goes little bit down, also out of 350, you can keep 200, 250. So you have higher chance of success with this strategy, right? You are not using 3 minute, 5 minute is comes with high risk and high reward, right? You can also use, for example, when you do 3 minutes and 5 minutes. You got a bearish tag and turn. Suddenly there was a pullback. Again, it dropped. Suddenly there was a pullback. Again, it dropped. So it comes with high risk and high reward. You have more opportunities, but you have to be very quick to book the. You got a bearish tag and turn. Suddenly there was a 20-25 point drop, and suddenly you see a green candle. You have to close your trade. So you have to be quick to enter, quick to exit. If you are a day trader, you are fully active trader. You can go with smaller time frames. But if you are more of a uh, right, you are already doing some job, you are already doing some business, you are doing this as a side hustle, then don't take a high risk of doing the day trades where you have high risk. So you follow 30 minutes time frame. Then when you get a signal, that that trend will continue for nearly next 2-3 days. If you get a bullish tag and turn, it will continue to go up. Or if you get a bearish tag and turn, for next 2-3 days, it will continue to drop. So your risk is minimal. So you wait for a bullish tag and turn, it will go all the way up. Whenever you get a bearish tag and turn, you can close your trade, or you don't you can even let it expire. You don't even need to close the trade because there will be minimum 100-150 points difference from a bullish tag and turn until you get it. So if you are not doing anything, automatically it will expire by itself, and you will keep all the premium. Right? Hope everyone is getting it. Right? It is like somebody thought SPX will drop further. They are buying a put from you. So you are selling a put, and also you are buying a put as a hedge. Price stays above this price in next 5 days, then all that money is 100% yours. So that is the strategy we use. If you want a low risk approach, this is the best strategy where you don't need to spend hours together. You just you can put an alert, right? You can say that okay, whenever you create an alert on SPX tag and turn, and if you want, you can do separately bullish tag and turn, bearish tag and turn, or you can say TNT combo. That means whenever you get a bullish tag and turn, or whenever you get a bearish tag and turn, you will get a notification. Yet you create an alert, then immediately it will send an alert. For example, okay, I might have, yeah, long break. Yeah, I might have deleted some old ones, but yeah, this one we got on 21st. From 21st, SPX went up, did a small pullback, went up, did a small pullback, went up, small pullback, went up. So it kept on going up. So that's what we use as part of this strategy. Whenever you see bullish tag and turn, do the bull puts. Whenever you see bearish tag and turn, do the bear calls. So your risk is, for example, now, right? We got for Bitcoin, you got bearish tag and turn, right? That means there is a high possibility. So if you see here, here you got a bullish tag and turn around 90,000. Price went all the way up. So here you got a bearish tag and turn, did another double top, did bearish tag and turn, bearish tag and turn. So in next 5 days, there is a very high possibility within next 5 days it will stay below this price. So now you got a bearish tag and turn, it will come all the way down in next 1 or 2 days. So that means if you are doing bear calls on Bitcoin, right? Just for example, that means there is a high possibility Bitcoin will drop all the way to the bottom. So whenever you get a bullish tag and turn, we do bull puts. Whenever we get a bearish tag and turn, we do bear calls. For example, let us look at Tesla. So now Tesla is somewhere close to the top. Maybe tomorrow or right Monday morning we'll get a bearish tag and turn. Then you do the bear calls on Tesla. Then in next 3 4 days Tesla will come all the way to the bottom. Again, when it comes to the bottom and starts moving up, then we get a bullish tag and turn. Then we do the bull puts, right? Or let us look at Nvidia. But again, right? Initially you don't need to. So here you got a bearish tag and turn. Then you do the bear calls on Nvidia. You go up. You are saying that Nvidia will stay below this price. So if Nvidia stays below that price, then all that money is yours. Maybe tomorrow we may get a bullish tag and turn. Then you do the bull puts. If Nvidia stays above that price in next 5 days, you can keep all that money. So in that way, whenever you get a bearish tag and turn, we do bear calls. Whenever you get a bullish tag and turn, you do bull put. So here you got a bullish tag, right? Bullish tag. That means it is telling that now price will become bullish. So in next 5 days, price went all the way up. You got bearish tag and turn. Next 5 days, price came all the way down. So whenever you get it, you are going little bit up. Then you are selling that. Okay, if you are collecting premiums, you are selling this. Then if price stays below that, then all the money collected is 100% yours. So if it stays choppy, that is yours. If it goes down, it is conveniently, comfortably yours. If it stays little bit up also, you can keep lot of money. So that is how you keep an alert on bullish tag and turn, bearish tag and turn. Whenever you get a bearish tag and turn, you do bear call spread. Whenever you get a bullish tag and turn, you do the bull put spreads. So your risk is minimal, your reward is high. So because when you do day trading, you are only collecting 100 $150 for a risk of $500. So suddenly Trump tweets something or some, right, or suddenly market reverses. So you are taking high risk for a lower reward. Whereas here you collect nearly $300 for a or $350 for a 150 risk. So your reward is high, your risk is low. So that's where we do. So this 5 day expiry or 7 day expiry, right? If you're doing for stocks, you go, if it is Monday, Tuesday, you go for this Friday expiry. If it is after Wednesday, you go for the next Friday expiry if you're doing for, but right, as I mentioned, the best thing to start with, because with all the stocks, sometimes you have the stock assignment risk, all those things. But when you do with SPX, you don't have any such type of risk, right? There is no stock assignment. So suddenly, because market goes up or goes down with the stocks, suddenly your brokerage may assign those stocks to you. But with SPX, they will never assign the stocks. So if SPX is looking bullish, it came all the way to the bottom, you got a bullish tag and turn, you buy it, even though it goes up or goes down, whatever it happens, they will never assign the stocks to you. There is no stock assignment. So your risk is very, very minimal. So mostly tomorrow it will touch the top and then we get a bearish tag and turn. Then we can do bearish tag, right? You do bear calls. Then next 4 or 5 days, price will stay below that. So like that, this is the lowest risk strategy. If someone want to trade, so all you are spending is 5 minutes to open a trade. You do a bull put. That's it. You don't need to keep on looking at the charts, right? You spend 5 minutes again. Tomorrow, if you get a bear call alert, you spend 5 minutes to open the trade. And 99% of the time, you can let it expire. You don't even need to close the trade because price will always stay above wherever you open. When you are doing a bullish tag and turn, price will be above that when it goes all the way to the top, right? Within the next 5 days, it will be above that. Or if you're getting a bearish tag and turn tomorrow, next 5 days, price will be below that price. So that is the best part of this strategy where you don't need to sit before the system for hours together. You don't need to spend a lot of investment because this is purely swing. You don't need to have $25,000 to do right multiple trades per week. Yeah, even if you have $5,000, $3,000, right, whatever currency it is. If you have very low amount also, because this is not a day trade. You take a trade today and you let it expire. If you are not even closing the trade, then it won't count as a day trade. If you're opening on 21st, you close on 23rd, 24th, 25th, then that is not counted as a day trade. So that is the best part with this strategy where you do bull puts whenever you see a bullish tag and turn, you do bear calls whenever you see the bearish tag and turn. So start with SPX. When you become confident, then now you do with SPX and DX. Then you do with Russell index. Then you can do with Dow Jones index. Same strategy because all those are cash settled. You can start doing, but initially start with because with NDX your bid and ask will be little far away. But with SPX the bid and ask will be very narrow. That means you won't pay much in the difference between the bid and ask. So you can collect more premiums with a much lower risk. So that is the major advantage with this tag and turn strategy with the right your time frame is 30 minutes. Whenever you get a bullish tag and turn, you do the bull puts. Whenever you get the bearish tag and turn, you do the bear calls. If price stays above this, all the money collected is yours. If price stays below the bearish tag and turn, all the money collected is yours. Right? As I gave you example, Bitcoin, you got a bearish tag and turn. Right? So before few hours you got, and then now you got, but you are not doing for the same day. If you're doing for the same day, suddenly you see a double top, you get panic. But you are doing for the next 5 days. That means within next 5 days, you are telling that Bitcoin will be lower than this price. So if Bitcoin stays lower than this price, all the money you are collecting for the bear call, all that credit you collected is 100% yours. So that is the major advantage with this strategy. Right? You are if you are doing a day trade, suddenly if it goes up, goes down, you have high risk. But here you are taking 5 days time. In next 5 days, it already went all the way to the bottom to 90,000. Now it came all the way to 92,000. So in next 4 5 days, you are telling that there will be a drop. So if it drops in next 4 5 days, all the money collected is yours. If it drops tomorrow itself, then tomorrow itself you can make nice profits, close the trade. Or within next 2 3 days it drops, you can close it and you can make nice profits. So this is a strategy with over 90% success where you need very less time, you need less investment, you don't need to keep watching the charts for hours together, and you have highest possibility to make profits with the lowest risk. So if anyone has any questions, you can put it in the chat window. So you start with SPX. Once you gain confidence, you can do with NDX, you can do with Russell Index, you can do with DJX. But initially, SPX is the best ticker to start this strategy with, where whenever price goes to the bottom, you do bull puts. Whenever you get a bull, right? It is not just going to the bottom. It is not that, oh, whenever price goes to the bottom, you will not do bully, right? It should go to the bottom. You should get some a type of candle where your indicator will tell, okay, now this is the best time to do bullish tag and turn, or this is the best time to do bull puts. This is the best time to do bear call, like that. Then only you will take the trade. It is not that, oh, because price came to the bottom, because right, sometimes price may go to the top. It doesn't mean that whenever price touches the top of the band, you will start doing bear calls. Right? It may go to the top, it might do a small pullback and again go to the top. So that's why you have to wait for that. Indicator will tell that, okay, now this is the best time to do bull puts. Right? If you get a bull tag and turn, that is the time you do bull puts. If you get a bearish tag and turn, that is the time you do the bear calls. So, right. So this is where our custom software, right? You have indicator called SPX tag and turn. That indicator will give you this indication that, oh, now SPX moved so much, now it will start moving up. Right? Whenever you get that bullish tag and turn, then you do the bull puts. Or right, as of now, we are expecting tomorrow we may get it. So we have to wait until that signal. Right? Don't We should not assume that, oh, the SPX moved somewhere to the top, let us take a bear call. Right? We should wait for price to go touch the, whenever you get a bearish tag and turn symbol, then only we do the bear calls. Whenever you see the bullish tag and turn, then only you do the bull puts. Until that time, we wait. So we use this indicator called SPX tag and turn indicator, which will help you to know when to do bull puts, when to do bear calls, and then we take the trades. So this is a tag and the indicator name is tag and turn, SPX tag and turn. So again, as I mentioned, if you want to do this, even if you have for one contract, all you need is $1,000. So 1000 USD. If you want to do one contract, actually you need only $500. If you have $500, you can do one contract, because if you are taking a 5 point spread here, that means your maximum risk is 500. Already you are collecting 300, 350 for selling the puts, for selling the bull put here. So your maximum risk is $200 on a 5 point spread. If you are doing a 10 point spread, you need $1,000. If you are doing a 10 contracts, then you need 10. But for one contract, all you need is $500. So even if you have a small account with 5,000, 10,000, 2,000 also, you can start. And you slowly build it. So initially you make some profit. Then now it goes to the top. Now you do a bear call. After making two profits, now instead of buying one contract, now you do two contracts. Again, you make some profits. Again, now you start, right? Start slow. As you gain more and more confidence, you can start slowly going up. So yeah, you need very limited capital. You don't need 20, 30,000, 40,000 to do this. Yeah, generally we trade at the money. So whenever you get a bullish tag and turn, right? For example, here you got a bullish tag and turn, right? 65.72. That means you sell 65.80, you buy 65.75 put. So if SPX stays above 65.80 in next 5 days, all the money collected is 100% yours. Because you are doing a 5 day expiry, you are collecting nearly 350, $400 on that 5 point spread. Right? If you do for the same day, you will collect only $100, $120 for a 5 point spread. But you are assuming that in next 5 days, price will stay above this. So your premium will be much higher. You collect 350, $400 on a 5 point spread. So you do at the money, you go little bit up from the at the money, you sell that, you buy the at the money put, you go 5 points above the at the money and you sell that put. Then all that money is, you can keep all that money if price stays above that. Yeah. If for example, right, on 21st you missed it, you can still trade it, right? Because as I said, this trend will continue for minimum 2, 3 days. So if you are busy in some meeting on 21st, you missed it, then you can enter on the next day. You So that is the major advantage with this strategy. You don't need to be right. If for day trading, you have to be very quick to enter, very quick to exit. But when you are doing swing trading, the trend, the direction will continue for minimum next 3 4 days. So even if you missed immediately, right, you can catch it here, or it went up, did a small pullback, went up, did a small pullback, went up, but within next one day you can do it. But now you don't do it tomorrow morning, but because now you are close to the top. Tomorrow in next 1 hour, or next right, first 1.5 hour, we may see a bearish tag and turn. Then we may see a drop all the way to 67 70 or something. So don't enter tomorrow, but after the signal, within one day, maximum one day, you can do, uh, you can still enter whenever, right, you are, whenever out of 8:30 to 3 p.m. Central, even if you are free for 5 10 minutes throughout the day, you can open a trade and you can let it expire. Again, tomorrow, if you get a bearish tag and turn, you just enter a trade any point of the day, any point of the time throughout the day, and you can just let it expire, because the next 4 5 days there will be a drop on SPX. So that is the advantage. You don't need to be on time, right? When you are doing day trading, you have to be very quick to enter and exit. Suddenly you enter a trade, you go to a meeting, suddenly there will be a drop, suddenly it will start bouncing, right? We saw on Friday, right? Right? Generally, because for active traders, we do the live sessions, we do live trades on 5 minutes. But if you are someone who is busy with your meetings, right? So we took 50 and 60 bear call, 68.50, 68, right? We got a bearish tag and turn. We went little bit up. We did 68.50, 68.60. It came all the way down, right? We made 100%, but so suddenly it came all the way down, then again bounced up. So tomorrow also again we may see another base. So when you are doing a smaller time frame, you have to be very quick to enter, very quick to exit. But when you are doing in a higher time frame like 30 minutes or 1 hour, you have good enough time to enter or good enough time to exit the trades. You don't need to be in a hurry to enter and exit. You have very, very low risk. You will have limited opportunities, but the trades will be much more quality trades, much more higher probability trades, where your risk is minimal, your reward is high. Right? When you do day trades, your risk is high. Right? On a 5 point spread, you may collect only 100, $150, but your risk is $350. Whereas here you are collecting $350, your risk is only $150 on a 5 point spread. So if price stays above this, all the 350 is yours. But you will have limited offer. You will not have 4 5 opportunities every day. You got one opportunity, then instead of doing one SPX, now you do 3 4 contracts. So if you're doing 4 contracts, right, every day, instead of doing one contract with in a 5 minute time frame, now you do four contracts in a 30 minute time frame, or 5 contracts. So now you have low risk, and in next 5 days you made nearly $1,500. Right, that is good enough for your weekly expenses. You can pay your EMI, or you can take care of your kids' education or something. So that is where now you have higher chance of success. You collect more premium. Your risk is minimal. On a 5 point spread, you are collecting 350 $400. So you take low risk, and you don't need to keep watching the charts. So that is where this higher time frame strategy, right? This SPX tag and turn strategy in a higher time frame always comes with a low risk. You will have limited opportunities, but instead of doing more trades with one contract, whenever you see a bullish tag and turn, you take 4 contracts. Whenever tomorrow you see a bearish tag and turn, you do 4 contracts on the bear calls. That is where we have more. You can keep making more profits. And once you become comfortable, once you start increasing your capital, right, it's all about compounding effect. Right, you start with 5,000, so you took some 3 4 contracts. So in next to 1 week, now you have 7,000. So again, it drops. Now you have $8,000. Now instead of 3, 4 contracts, now you take 5 contracts whenever you get the next bullish tag and turn. So like that, slowly that compounding effect will take take your capital to much bigger amount as you slowly progress. When we do day trading, it comes with higher risk. When you do this trading in 30 minutes, you have much lower risk, and you don't need to keep spending throughout the day watching the charts, or you don't need to stress out. You don't need to spend lot of time, right? You don't want to impact your primary job. Minimum until your job is there, you don't want to keep watching the charts, those things, right? Because as you gain more and more confidence, you can increase the capital. Now you don't need to worry about the job loss or anything, because you can do across the globe the same thing. You can do from anywhere, and you can make much more than what your IT job does. But until you get that confidence, you go slow. Once you build the confidence, you can slowly increase the position size. But right, that compounding effect is something you need to understand. Right, you start with 5,000. 5,000 will become 5,500. Then you get a bear call. Again, you do 3, 4 contracts. Now it became 6,000. Now you do another 3, 4 contracts. Again, you do a bull put. Again, next 2, 3 days it will go up. So that's how it will. So you are taking a low risk. You are generating the wealth in a slow and consistent manner, rather than trying to take too many opportunities, trying to do lot of trades. Rather than that, you are going with a structured, with a systematic approach. Whenever price goes all the way to the top, you get a bear call. You do the whenever you get a bearish tag and turn, you do the bear call. Whenever price goes all the way to the bottom, you got a bullish tag and turn, you do the bull puts. So one is you need low capital, low time investment, less stress, low risk. You are collecting more premiums for you are collecting 350 $400. Your risk is $100. If you make profit, you make 400. If you lose $100. So you have nearly 1:3, 1:4 risk reward. So that is the best thing. So even out of 5 trades, even if you lose one, in other 4 trades, you are making 300, 300, 300. In one trade, you lose 200. Overall, you are positive at the end of 2 weeks. You made your 1,050. Just I'm talking about one contract. Now, once you gain the confidence, you do it with 2 contracts. Now you are making $2,000 every 2 weeks. Once you gain confidence, now you increase it to 4 contracts. So like that, 80-90% of the time, it will continue to go up. Whenever you get a bearish tag and turn, it will continue to go down. Again, it comes all the way to the bottom. You get a bullish tag and turn, you do the bull puts. So that is the way you have a systematic, a proper rule-based strategy where you are not taking a high risk. Your risk is low, your reward is high. You are following a proper strategy which will consistently grow your wealth. You can consistently have a plan B. Once you become confident, then you don't need to worry about anything else. Yeah, generally we do 5-day expiry for this strategy. So, right, for example, right, again, a few members are asking me, can you give me an example? What is a bull put and so price came all the way to the bottom, right? Always big companies will wait for price to come to the bottom and then they take it up, right? Whereas we retail traders get panic, they sell with a stop loss, whereas big companies will buy here. We wait until price goes all the way to the top, retail traders will buy at the top, whereas big companies sell at the top. So generally retail traders always do the opposite. So what we do is this bullish tag and turn, whenever big companies started buying, it will tell an indication that, oh, now big companies are buying. So now it is the best time to do bull puts. So for example, here, when you get this signal, the price is around 65.75, right? Around 65.75 is the SPX price. Then what you do is you sell. So let us say tomorrow morning we are getting it, right? Then you sell 65.80 put and buy 65.75 put and collect $350 premium for, just for example, I'm giving 12.5. So this is what we do, right? We are selling 65.80 put. So you are doing for SPX 65.80 put. You are selling a higher strike put. You are buying a lower strike put as a hedge. So this is our protection. This is our insurance, right? That 65.75 put. We are we are confident that because price came all the way to the bottom, big company started buying. Our indicator gave an indication that it is bullish now. We are confident that within next by before 12.5 the price will be above 65.80. So that's why we are selling a higher strike put. You are buying a lower strike put as an insurance, as a protection. Suddenly, because of suddenly some third world wars will start, or some COVID will happen, or some other thing will happen. Suddenly, if market drops so much, you want to avoid the risk. So that's why. So now you are, if price stays above 65.80 by 12.5, your reward is $350 per each contract, and your risk is maximum 150 if price stays below 65.75. So if it stays somewhere in between 65.75, 65.80, still you will make profit. If it goes above 65.80, you will make profit. If it stays exactly at 65.80, all that money is yours. So like that, you have lot of possibilities to make money. So let us take an example. Tomorrow it will go all the way to the top, right? Somewhere around 68, let us say 68.85. Then what we do is, let us say tomorrow we got a bear call spread here, tomorrow morning. So then what we do is, instead of put, we'll do 60, right? Let us say it is 68.80 call. Right? Just for example. So if we get a bearish tag and turn symbol, that means we are telling in next 5 days price will drop. Right? We are not telling immediately same day, tomorrow itself it will start dropping. Right? There is a high possibility it will drop, but we are taking 5 days so that you collect more premiums. Right? Your credit is much more higher. You collect more premium, and if within next 5 days, if price went to the top and then you got a bearish tag and turn, big company started selling, then the indicator will tell, okay, now this is a good time to do bear calls. Then if price within next 5 days, if price goes all the way below 68.80, all that $325 is yours. If it, even if it goes little bit up, same day, you don't need to worry, because in next 5 days already it moved so much, right? From nearly 300 points it moved. So there is very high possibility tomorrow it will start dropping. Then in next 5, if it drops tomorrow itself you will make nice profits, right? Or within next 5 days, you don't even need to close the trade, right? Then it will stay below 68.80 by coming Friday. Then all the money collected is yours. Right? Think you are like an insurance company selling car insurance or health insurance, right? Somebody is want to, right, buy. So you are telling them, even if price goes so much high also, I'll sell you at 68.80, because you know that price moved so much high, and then big company started selling, then you got a bearish tag and turn, you know that price will drop. Because price will drop, you are selling a bear call. If you think price will go up, price already dropped so much, right? From nearly 67, 80, it came all the way to 65, 50. You know that price and big companies started buying. Then the indicator is looking all those things. It is telling now price will go up. So whenever you see bullish tag and turn, you are doing bull puts. You are selling the put, buying a lower strike put, and if price stays above that, all the money is yours. Whenever you get a bearish tag and turn at the top, you are selling a call, you are buying a higher strike call. Then if price stays within next 5 days, if price stays below that, then all that money is yours. In that way, you have very, very minimal risk. You have again, right? Out of 5 trades, even if you lose one trade, in 4 trades, you are making nearly 300, 350. In one trade, you are losing 150, 170. So overall, at the end of 1 week, end of 2 weeks, you will be making $1,000, $2,000 with every each contract. If it goes much further high, that one trade you may lose, but that too you are not doing the same day expiry. So your risk is very, very minimal with this strategy. So that is the best part with this strategy. You don't need to spend a lot of time. All you do is whenever you will receive an alert on your phone or your email. Whenever you receive that alert, just you open your mobile, you do a bull put. Whenever you receive a so if it goes all the way to 68, 80, you see a bearish tag and turn, you do a bear call spread. And if price drops in next 5 days, then all the money collected is yours. So that's what we do using this strategy. So again, when you do for a 5 day, right? If we do it, because in the daily sessions mainly we use 5 minutes. We do the daily, right? We do quick multiple trades for the active traders. But if you are a swing trader, you are not doing for the same day expiry or 1 day expiry, 2 day expiry. You are doing something for when you do for 5 day expiry, your premiums you will collect much higher premiums, right? If you get a bull put here, you are doing for next to 5 days, you are telling that price will stay above this. Then your premium, you collect much higher premiums where your risk is one, your reward is 4 times out of the risk. So that's what you need to understand whether if you're an active trader, you can quickly enter, quickly exit. You follow the zero DTE or same day expiry. But if you are someone who cannot quickly enter, quickly exit, right? You suddenly take a trade, you get into a meeting. By the time you come back, right? I have shown you that example. You can watch the live session, right? All the recordings are there, right? If you go to YouTube, you see all the recordings whenever we take trades. So price dropped all the way, but suddenly last 10, 15 minutes, suddenly it bounced. So we booked profits here. But if you are in some meeting during that time, right? We did multiple bear, when you got a bear tag and turn, we went to 68.50, 68.60. Then it started dropping again. It came here. We did 68.40, 45. So when it came all the way to the bottom, we took the profits. But if you are in some meeting at that time, right? You thought like, oh, price will drop. You did not close the trade. Suddenly, last 10, 15 minutes, Friday, exactly last 15 minutes, they bounce the market, right? Our 68.50, 68.60 made 100%. But if you did not close when we got this, right, it came all the way to the midpoint, touched the midpoint, started again bounced. So if you missed closing this trade because you are in a meeting, your IT meeting or something, so that is where your day trading comes with high risk. You have multiple offers, right? Same day we take two, three trades. Whereas when you are doing 30 minutes, you took one trade for next 3, 4 days, you it continues to go up. So your trend continues in the same direction. Again, tomorrow you get a bear call, SPX bear, right? SPX bearish tag and turn. Next 2, 3 days, it will continue to drop. So you will have limited opportunities, but these are quality opportunities with a lower risk, with a higher reward. When you are doing day trading, you collect $100, $150, your risk is 350. When you are doing trades for 5 day, 7 day expiry, your risk is 150, your reward is 350. So you have less opportunities, but more quality trades, more low risk trades when you do the swing trades. When you do day trades, you will have more opportunities, but you have to enter and exit quickly. Suddenly you miss, or you assume that, oh, it may go further down, let me hold it, let me, yeah, right? You are either not watching the live session, or you are busy in some meetings, you miss booking the profits on time. Then that is where you are missing, right? You made all the 50-60%. You thought it may drop further. Suddenly, the last 15 minutes, they suddenly took it 20 points up. So that is where it comes with more opportunities, but with a more risk when you do day trades in a smaller time frame. When you use 30 minutes, your risk is low. You will have less opportunities, but they will be the best quality opportunities where your your risk to reward ratio will be always high, and your you don't need to spend a lot of time. And when you get confidence, now you increase the quantity. Instead of taking one contract here, now you do 3-4 contracts. Whenever you get a bullish tag and turn, you take 3-4. When you get a bearish tag and turn, you do 3-4 contracts. Like that, you have you have much higher success. So you're not going with quantity, but you're going with quality here, with a bullish tag and turn or with a bearish tag and turn. 30 minutes is good enough. So if you use 30 minutes time frame, that is good enough for you to take these trades. So again, the investment is because you are also buying a call, by you are selling a put, or also buying a put. That means there is a 5 point difference. That means your maximum investment you need is $500 for each contract. If you buy 3 contracts, you need $1,500. If you want to do 5 contracts, you need $2,500. And you are already collecting some premium. So you are selling a 5 point spread and you are collecting $300. That means your maximum risk is 200 per contract. So if you have $2,000, you can do two, three, minimum 4 contracts. You can even do more, but you can limit to 3-4 contracts if you have a $2,000 investment. So like that, right? This is the low risk strategy, and the best strategy where you have limited risk with a higher risk to reward. You make 5 out of 5 trades, minimum even 4 trades. Yeah, every 5 trades, minimum you will win 4 trades. So if you are making 300, 300, 300 4 times, $1,200, you lose one trade, you lost $200. So your overall net income is $1,000 when you trade with one contract. So generally in every 1 week, we get minimum 2 to 3 trades like this. So you start with SPX, then you can use the same strategy with NDX, RUT, because they all move in the same direction. So tomorrow, if you see Russell, right? Russell, you got a bullish tag and turn. It went all the way to the top. Now it is close to the top. Maybe sometime tomorrow or maybe on Tuesday, we will get a bearish tag and turn. Whenever you get a bearish tag and turn, you do the bear calls. Whenever you got a bullish tag and turn, you do the bull puts. So here you got a bearish tag and turn. Then you do the bear calls. It came all the way to the bottom. You got a bullish tag and turn. Then you take it, right, nearly 2-3 days. It's continued to drop. Then you got a bullish tag and turn. Then you close the trade. Then again it went all the way up. Now tomorrow we may get a bearish tag and turn. Then you do the bear calls. Next 2-3 days it will continue to drop. Right? Same thing with NDX. Because all these are cash settled, right? You can use strategy for stocks also, but only problem with stocks is the stock assignment. Here There is no stock essay. You got a bullish tag and turn, right? Tomorrow it will go touch the top, and then if big companies start selling, then we will get a bearish tag and turn. Then you do the bear calls. You go little bit up and you do the bearish tag. Then in next 5 days, NDX will stay below that price. It already moved nearly, right, somewhere from 24,000. It moved nearly 1,400 points up in last 3 4 days. There is very high possibility tomorrow we'll see a drop. We'll get a bearish tag and turn, and then we'll see a nice drop. So then you take bearish tag and turn, then you'll make some nice profits with NDX bear calls. That's it. All we need to do is just to follow bullish tag and turn, bearish tag and turn with SPX, NDX, RUT. You start with SPX. When you gain confidence, you do the same thing with NDX. You do the same thing with RUT. So now you have limited, very low risk strategy. You are collecting $400-500 with a smaller risk. So that is the strategy I wanted to share. Yeah, you can also do it in paper trading. You can open any brokerage, right? First 1 week, if you want to watch, you can do paper trading, and you can trade in paper trading. Once you gain confidence, then you can start using the real money. So yeah, I'll share the recording, and then so even with day trades also we have 80-85% success. But again, as I said, some of you are full-time employees. Some of you are, so that is where you may have you may, right? Suddenly you miss closing the trades on time. So that is where, so I shared the channel. So one more thing, right? Because of the Good Friday until end of today, you have an option where you get a hotel savings card. That means, right, it is not exactly like a gift card. You cannot use the entire amount in one transaction, but there is no expiry date, right? For example, you subscribe for options, then you get a $200 gift card or hotel savings card. Maybe when you stay in a hotel, they may deduct $100 on the first stay. Then in the next day, they may deduct another 50, another, right? Based on the hotel, based on the cost. If you're staying for 4 5 days, they may deduct entire $200 within one stay. But if you are staying only for one day, they will give you, so compared to Expedia, compared to all the hotels.com, all the things, you get a better discount compared to all those things. So it is like trying it for free, right? You don't need to even take the trades, right? You can watch, right? Okay, is it really working or not? Once you gain the confidence, then you can start using your real money. So you get it. So you subscribe to the options channel, paying $200, and then you get a $200 hotel savings card, which you can use across US or UK or UAE, across the globe. You can use it anywhere. So that is like you are trying it for free. So first 1 2 weeks you trade in a paper account. Now you have zero risk, right? Because you paid something, you got a hotel savings card worth of that. So first 1 2 weeks, within 2 weeks, you know that, oh, this is working, right? Whatever I explained. So tomorrow you can see that we'll see a bearish tag and turn, we'll see a drop. So then you get confidence. After 2 weeks, you can start, right, trading on the real account with the real money. And then you know that, okay, the strategy is working exactly as I explained. Then based on your account size, you can take 2 contracts, 3 contracts, 5 contracts, 10 contracts based on your account size. You can do within 1 or 2 trades, you'll make that $200 back. So if you want to just to get the alerts, then you can go to options underscore PREM. So go to Telegram and you can enter that options underscore PREM underscore bot. Then whenever you subscribe, you are getting nearly the same amount of savings card, which you can save. There is no expiry date. Even you can use it this year, next year, after 10 years also. You can continue to use that savings card. Whenever there is a website, you can also compare the price with all the other websites. That will give you the best price and you get a discount on that. So, or you are someone who want to use the indicator, right? You want to have the indicators in your system so that you don't only trade SPX. Once you gain the confidence, you can also take SPX, NDX, RUT, the same strategy. Only thing is you want to do, right? You are not, for example, in the live sessions, we mainly look at 5 minutes time frame. But you are someone you don't want to because you are not a full-time trader. You are not a dedicated trader. You want to take low risk trades, right? For you, this strategy, 30-minute strategy might work best for you. Then you can have the indicators for yourself and you get, right? So for example, if you take three indicators like tag and turn, T5, and then we have one more indicator like price pulse or FLMSL, then you pay $349 per month. You get $400 hotel savings card. That means you are getting the indicators. You can use it on, right? If you are someone who has little more high risk, you just don't want to take on SPX or something. And generally, I mainly look at SPX every day, but you want to use it on NVIDIA, right? You might be some trader who like NVIDIA stock, right? Whenever you get a bearish tag and turn, you do bear calls. Whenever it comes all the way to the bottom, and tomorrow you may see a bullish tag and turn, you do the bull puts. And again, it goes all the way to the top for next 1 2 days. Again, you get a bearish tag and turn, you do bear calls. So if you are someone like that who want to don't just want to restrict yourself to SPX or NDX or RUT, you also want to do it on India stocks or US stocks or different other tickers. You want to take you are more of a full-time trader. You want to take more opportunities. Then indicators are best for you, right? Because I may only take SPX trades in the alert channels or in the live sessions, but you want to have more opportunities, then the indicators will help you. Where you for first 1 month for three indicators you pay 349, but you get a $400 worth of hotel card, so that you are getting more than what you are paying. And because everybody will stay in some hotel or other in next 1 year, 2 years, 3 years, so you can use all that amount. So then you use that. Then in 1 or 2 trades, you make your $400 back. But minimum first 1 week, you can, instead of investing your money, you can just watch, right? Just watch for 1 week to see, okay, is the strategy working or not? Okay, we got a bearish tag and turn. Okay, but it is historical, right? You may not get confidence by looking at some previous signal. Tomorrow, we may see a bullish tag and turn, and then Nvidia may go to the top. Then you will get the confidence. Okay, I got bullish tag and turn. If I would have done a bull put, then I would have made some $200-300. Again, it goes to the top, you may get a bearish tag and turn, again you will see a drop. So like that, once you watch for 2 3 days, your confidence will increase. Then you feel like, oh, this is working good. Let me do with SPX, let me do with Nvidia, let me do with Tesla, let me do with Amazon, let me do with Meta. You can choose which, right? Whether you are in UK, you are in Dubai, you are in India, whichever stocks you want, you can, right? If you want to do with Nifty, you can do with Nifty. If you want to do with Infosys, ACS, whatever you want, you can use. The strategy is same, right? Price action is same, logic is same. Only thing is the symbols will change. So if you want to get the indicators, so until end of today, you will go to this ninja underscore apex underscore bot. So I can also give you a guarantee that if you use the strategy as I explained using 30 minutes, and if you don't make money, right, 80% of the time, right, I'm not telling we'll have 100% success, but out of every 5 trades you take, minimum you will win four trades, whether you do SPX or whether you do NDX or QQQ or SPY, NVIDIA, Tesla. Every 5 trades using 30 minutes will win 4 out of 5 trades. So if you are winning 4 trades, that means we win nearly $1,000. You right $1,200, you lose $200. That means overall, at the end of 1 week or end of 2 weeks, you will have a positive $1,000. So if you don't do that, then you will also get a refund of what you're paying. But only thing is you wait for the signal. Only when you receive the signal, you take the trade. Don't assume that our price went to the top of the band, let me take it, right? You have to wait for a bearish tag and turn to do the bear calls. Whenever it goes to the bullish tag and turn, you have to do the bull puts. So whenever you have to uh, exactly for right, this is a rule-based system, right? We are not trading with emotions, you are not trading with assumptions, you are not trading with FOMO. Only if you get a bull put or bullish tag and turn tomorrow, then you take the bull puts for Nvidia. You go a little bit down, you do the bull puts, you collect the premium. If you get a SPX, you get a bearish tag and turn. Right? You have to use 30-minute time frame. You have to wait until price goes all the way to the top, and you get a only when you get a bearish tag and turn, then only you do the bear calls. Whenever you get a bullish tag and turn, then only you do the bull puts. So you have to, if you follow the rules, you will be successful. Every 5 trades, minimum 4 trades, you will make money. So you start with SPX or NDX or Nvidia or Tesla, but you you gain the confidence for first 1 week, then you can start taking the real trades. And if you don't win 80% of your trades, then whatever money you pay, you can get back that. So you are getting the free hotel card. You're also getting your money back if you don't make money or you don't make that 80% success rate. You have to follow the strategy, right? Don't try to deviate from the strategy. Don't try thinking that, oh, price came to the bottom, so I took it. You have to wait for the signal. Only once you receive the signal, you take the trade. Only if you get a bearish tag and turn, you do the bear calls for SPX. Only if you get a bullish tag and turn, you do the bull puts, right? Whatever you do, take any one symbol, right? Don't try to take 20, 30 different symbols and do it. But take either SPX or NDX or SPY or QQQ, Nvidia, Tesla, Amazon, Meta, Infosys, TC, whatever you want, take one symbol and then take all the trades throughout next 4 weeks. And then if you don't win 80% of the trades, then you can get back the money you are paying. You can keep the hotel card. You also get all the money back. So that's what you do. And then you will gain confidence that, oh, this strategy is working good. You don't need to spend a lot of time. You don't need to spend uh, right lot of money, lot of investment, and you have a 0% risk, right? You just for trying, you are getting a hotel savings card. And then if you get confidence, then that is the best thing, right? Because now you don't need to worry about immigration visa rules, immigration rules, or what Trump is doing, what Trump is tweeting, all those things. Then you have high chance of success. So and right, this is like a zero risk, just for trying out, just for taking time. You're also getting a hotel savings card. So next 4 weeks, you don't even need to take any trades. Just keep watching, right? Okay, now I got a bullish tag and turn. Or you just take in a paper account. You open a paper account in any brokerage, or even you can, yeah, write down. Okay, now I got a bullish tag and turn. This is somewhere here. So okay, next to 4 5 days, price should be above this. Or I am taking, like, let us assume you write it down in some notebook that, okay, I will take a bull put here. And then you see that if it goes all the way up, you would have made nice profit. Tomorrow you get a bearish tag and turn, then assume that, okay, if I would have taken a trade, I would have taken a bear call here. Then wait for next 4 5 days, and then you see that there is a nice drop. Then if it comes all the way bottom, again you see a bull put, then you can close the trade or you can just let it expire. Again, if it goes all the way up, so the same process you repeat, right? You can take, right. The best ticker is always SPX because no stock assignment, no risk of uh, broker assigning the stocks. But once you gain the confidence, you can use the same strategy with NDX, RTX, Nvidia, Tesla, QQQ, SPY, everything. But the best ticker to start for next 4 weeks on a paper account is SPX. And once all you need is 1 week is enough for you to build the confidence. Within 1 week, once you gain the confidence, then you take the trades in the real account. So if you don't make the money, then you get back all your refund. and also you can keep the hotel savings card. So whether you get the indicator or you get the options, whatever you do. So same thing, right? If you are a stocks buyer, if SQQ, you are in 30 minutes, right? For example, tomorrow we may get a bullish tag enter. Then you buy the stocks. So within next 5 days, price will go all the way up. If you are just a stocks buyer, right? If you are a Nvidia, price came all the way to the bottom. Tomorrow, if you see a bullish tag and turn, you buy Nvidia stock or you buy NVDL, right? If you don't want to invest huge money, you can always go with right 2x daily ETF. So you are someone who don't want to do options. Then you can even use it when you get a bearish tag and turn, you can short it. Whenever you get a bullish tag and turn, so here you got a bullish tag and turn, stock went all the way up. Right? Even though there are some small drops for next 1 2 hours, finally within next 4 5 days it will go all the way up. Again you got a bearish tag and turn, it dropped. So tomorrow if we get a bullish tag and turn, again NVDA will all the way up. Next 5 days you will see a nice move all the way to the top. So whether you are a stocks buyer, options buyer, futures, right? If you want to do same thing with futures, right? In a personal account, right? Not for prop firms, because in prop firms you have to close the trades on the same day. So you cannot do it. But so so whenever you get a bearish tag and turn, tomorrow if you get a bearish tag and turn, you can short it. You can hold for next 4 5 days. Then there will be a nice drop with NQ or with ES. So like that, you can use it for futures or options or stocks. You just to follow the strategy, use any one ticker. Once you gain confidence, then you can use it with multiple other tickers. But to start with, the best ticker to start with is SPX, where you have high liquidity and low risk. Yeah, all we need to use is mainly this SPX tag and turn, and then T5 will give you additional confidence. If you use this tag and turn T5, that is good enough for this 30-minute strategy, this low risk strategy. So tag and turn and T5. So right again, one more time. So you are going with, if you want just alerts, because in alerts you may get 5 minute trades, 30-minute trades, all those things, right? Because we have some traders who are full-time traders, we have some members who are swing traders. So we may look at SPX, give some day trades, give some swing trades like that. But if you have indicators for yourself, you can use it for whichever you want. So you will become independent. You can uh, you can become independent. So that's where you use this SPX tag and turn indicator. Uh, and as I mentioned, if you don't see 80% minimum 80% success, so use it with SPX or use it with any of your favorite ticker. And then you show your trades, and if you don't make 80% success, you will get all the refund, whatever you paid, you will get the refund. So that's where you start with 1 week, you just watch it. You don't even need to take any trades, you take in a paper account. Once you get the confidence, you can start taking, and then if you don't see 80% success, you can keep the hotel savings card for yourself. You can also get back the money you paid. So, right, again, as I said, this is a rule-based approach where whenever we see big companies are buying, the software will see that and it will give you the bullish tag and turn. Whenever it sees the big companies are selling at the top, then the software will see that will give a bearish tag and turn. So you have very minimal risk with this approach, and you are not doing for the same day or next day. You are going 5 days later from the day. So you are buying at the bottom. That means even next one day, if it drops also, within next 4 days, it will go up. You are waiting until it goes all the way to the top. When the big company starts selling, then the software will identify that and then giving a bearish tag and turn. That is where you are going little bit up and you are doing bearish tag, right? You are doing bear calls. So that means next to 4 5 days, price will come all the way down. So you are following a proper logic. You are following a proper systematic approach. We are not just randomly taking trades somewhere in between. You are waiting for the bottom or you are waiting for the top. And then you are in bear calls or you are doing bull puts at the bottom. You are doing bear calls at the top when you see the signals. So that is where we have very minimal risk, easily, right? 80% is minimum success we will make. So every 5 trades, even if we lose one trade, 4 trades we will make profit. That means with one contract we can make on average $1,000 every 10 days. Once you gain the confidence, you can slowly start increasing the position size. Instead of one, then you take 2 contracts. Once you gain more confidence, then you go with 3 contracts. Then you go with four. Like that, you slowly, your capital will increase, your position size you can increase, and you can. So, it's a pure systematic approach with a pure logic based on what the big companies are doing. So, your risk is limited. You don't need to spend a lot of time. All you need is whenever you receive a notification alert on your phone, you see that, oh, now we got a bull tag and turn. Okay, let me do bull puts. Tomorrow you see a bearish tag and turn, you do the bear calls. That's it. All you are doing is that simple strategy. So you right, this is like a zero risk for you, where you are getting a hotel savings card. You have 100% refund commitment if you don't see 80% success. If you follow the strategy, right? You don't. So you show me that, oh, I did this one, but I lost. Then, yeah, if you show that you follow the strategy, if you lost, then you'll get all the money back. So this is the T5 indicator, right? So this is your T5 indicator. So price went all the way, right? Here you got a bullish tag and turn. T5 also gave a buy signal. That means you got much higher chance of success now, right? Now price is somewhere at the top for T5, but still we don't have the bearish tag and turn. If tomorrow, right, T5 is showing that it is overbought. Tomorrow price goes little bit up and you get a bearish tag and turn, then T5 is telling price will drop, then this is also telling price will drop, then you have much more conflict, you have much more confidence. Then your chance of success is much more high. So this is your T5 indicator, which will show you when it is bullish, when it is right. If price comes all the way to the bottom, it will go up. So price will is consolidating here at the top. Tomorrow we'll see a drop with SPX, NDX, RUT, all those. So that is where you do the bear. So we'll wait for a bearish tag and turn tomorrow morning, and then we'll do the bear calls. So yeah, that's it, everyone. So the session is recorded. So I'll share the recording. So you can watch it out, and then yeah, it is basically right. You have a zero risk here, right? If you want, you can take 2 weeks to paper trade, 3 weeks to pay, because it is like you are already getting a hotel savings card worth of whatever you are paying. That means you are not in a hurry to make money. You want to make sure the strategy is working, and then if it works, and then you have a plan B. You don't need to worry about anything else, about the job market, about what Trump is doing with the H1Bs or H4s. So you have a proper strategy, proper systematic rule-based approach which you use. If it doesn't work, then you are getting your money back. You can keep the hotel savings card. It is also right for just trying out. You got your compliment, but I am 100% confident that you will continue for lifelong. Yeah, that's it, everyone. Have a nice rest of the day. and we'll we'll continue in the evening with the. No, you cannot set up these things on Robinhood. You need to have a TradingView account. But you can do the trades, whichever brokerage, whether you have Robinhood, you have Thinkorswim, you have whichever platform, you can take the trades. But to see the signals, you have to do it on TradingView. You need to have the indicator subscription, and then if you have TradingView platform, then you can watch the signals, and you can take the trades by yourself. But yeah, you can take the trades in Robinhood also. You can do bull puts, bear calls, uh, in Robinhood or Thinkorswim or IBKR or Tradier. There are so many brokerages. You can do trades in any brokerage wherever you have. But right, so there is a low risk strategy. You don't need to spend a lot of time. You don't need to have a lot of money in your account. All you are doing is whenever you get a bullish tag and turn, you do the bull puts. Whenever you get a bearish tag and turn, you do the bear calls. That's it. You can just let them expire, or when price comes all the way to the bottom, you see another bullish tag and turn, you close the bear calls. Or if trend continues for next 3 4 days, you don't even need to close the trade because you are not immediately opening closing the trades. They won't count as day trades, right? If you are opening on 21st until 24th, 26th or something, you are not closing the trade. So yeah. Yeah, for today, I'm giving you this tag and turn indicator, even if you go with a monthly subscription, right? Because of the Black Friday offer, we are giving it. So, yeah, generally it comes with a premium plan of 6 months or more. But because of the Black Friday, because I want it, I know market is so bad, job market is so bad, everyone is in a big stress. Not just AI, because of the immigration, all these things. So, yeah, you can. So again, if you are some fund member, I'll give you this access to this indicator for free. But yeah, if you're not in the fund, then yeah, you can get this one, get this indicator, and then you can trade. And yeah, right, you have hotel savings card is completely yours. And if you don't see 80% success, then but you just to follow SPX for first 1 month. After you gain confidence with SPX, you can do for NDX, you can do for RUT, you can do for Nvidia, you can do Tesla, Meta, Amazon. So this strategy is best for these good tickers with high liquidity. Don't do with company stocks or something, but you Meta, Amazon, Google, Nvidia, Tesla, uh, those things. It is good, right? In addition to SPX is our number one choice, then RUT, then NDX, then comes all the other FANG or all the big company stocks. So yeah, that's it, everyone. So you can watch all the live session videos. Every session is recorded. So again, prop firms, we because you cannot hold the trades for more than a day. That's where you cannot use this strategy. But minimum what you can do is if whenever you want to take some trades, you go to 30 minutes, then you see whether market is in a bullish or bearish direction. Then in the lower time frame, you can take the trades in the same direction. If SPX tomorrow, let us say you get a bearish tag and turn, then for next 3 4 days, you can mainly focus on the shorts on the NQ, RES, right? If let us say GC is bullish now, then you focus mainly on the bullish trades. Whenever you do the trades in 3 minutes or 5 minutes, you mainly focus on the buy signals. So using this, you can also do the prop firms in a smaller time frame. Start with 30 minutes. 30 minutes if it is bullish, then in the 3 minutes, 5 minutes, you mainly take the buy signals. If in 30 minutes, if it is in a bearish tag and turn, then you mainly focus on the sell signals. Yeah, that's it, everyone. So we'll continue in the evening session, in the live session for prop firms. But yeah, this deal is only for today. So until end of Sunday, because of Thanksgiving deal. So you are getting if you get options or stocks alert channels, then you are getting a hotel savings card worth of what you are paying, and also you are getting a with indicators plan or options plan. You're within, especially with the indicators, you get indicator and you don't see 80% success with this strategy, then you also get back your money and you can keep the hotel savings card for yourself. So you have to go to this Telegram bot, Ninja underscore Apex underscore bot, and then you can select a three indicator plan. You can get that three indicator plan. Then you get a $400 savings card, and then you get 1 month access to these indicators. So within 1 month, if you don't see 80% success with SPX, then you also get back your money, whatever you paid. If you see the success, then you can continue for lifelong and you can keep making with a low risk and you can keep extending the number of contracts. Yeah, in the evening session, setup session, I'll give, I'll provide access. Yeah, Nagendra, that is right. Yeah. So generally, this tag and turn generally comes with 6 months because of the Thanksgiving deal. Even though you get a monthly access, you will get it until end of today. Yeah, even though you have yearly 6 months current members, if you have 6 months plan or yearly also, you get access to this indicator. So if anyone already got the access, I see that Lakshmi got access, Nagendra got access, others. You can send a message with your TradingView username. So if you go here, right, if you go to TradingView, click here, then you will see your username, right? You can just send that username. You can go to the same bot and you can say that, okay, I got the access to this three indicator plan. Then you provide this username, then you will get access to this tag and turn, and then you can start taking trades from tomorrow with SPX. So for options trader, this is the best strategy. Whereas for prop firms, right, as I explained, the best strategy is we use FLM or RLM along with our scanner, right? We use this in the smaller time frame with 3 minutes or 5 minutes. If everything is green, we mainly watch out for the buy signals, right? If everything is so, yeah, I don't want to confuse now, but yeah, for now, uh, let us just focus on tag and turn because if I explain too much, again, you may get confused. For now, anyone who want low risk options trading, then SPX tag and turn along with T5, that is the best way to make nice gains with a low risk. With a limited, you don't need to spend a lot of time every day. You just spend 5-10 minutes on a daily basis. That's it. Your limited trades, less time, less capital investment, very low risk. You collect 300, 350 for a $150 risk. Then 80% or more than that will be making profits. Yeah. That's it, everyone. We'll connect back in the evening. Bye, everyone. No, option channel members will not get the indicators. Right? Only if you get the indicators plan, you will get the indicator. Options plan members will only just get the alert. So once you subscribe, then you go to the same bot and then you share the trading view username. You go to the same ninja underscore. So if you got the indicator access, you go to this ninja underscore apex underscore bot and you put your trading view username and also you put your email address so that we can send the hotel savings card. If you got the options plan, you go to this options underscore PREM underscore bot, and then you do the same thing. You tell that, okay, I subscribed for this options plan. Please send me the hotel savings card. Then you will get the $200 card. If you get the indicators plan, you get the 400, or yeah, basically you get two cards, 200 plus 200, for which there is no expiry date. You can use whenever you want. Yeah. Bye everyone. Have a nice rest of the day. We'll talk again in the evening setup session. Yeah, trading view, there is a 80% discount until tomorrow. So, or even you can do with a free plan also, because all you need is two indicators, SPX tag and turn and T5. So you can even start with a free plan with trading view.